What do you know about TDS? TDS stands for Tax Deducted at Source, which is a mechanism used in accounting and taxation systems. It is a method of collecting income tax in India at the source of income generation. Under TDS, the person responsible for making specified payments such as salary, interest, rent, commission, etc. is required to deduct a certain percentage of tax from the payment before making it to the recipient. The deducted tax amount is then remitted to the government by the deductor, the person making the payment, on behalf of the recipient. The recipient of the payment receives the net amount after deducting the applicable tax. TDS serves two main purposes. Tax collection. TDS ensures a steady collection of tax throughout the financial year by deducting it at the time of income generation. Monitoring compliance. TDS helps in monitoring and ensuring compliance with the income tax regulations by tracking transactions and ensuring the deduction of taxes at the source. Why is TDS deducted from certain payments? TDS is deducted from certain payments to ensure a steady collection of income tax throughout the financial year. It helps the government in efficient tax administration by collecting taxes at the source of income generation. TDS also acts as a means to monitor and ensure compliance with tax regulations. By deducting tax at the time of payment, TDS helps in preventing tax evasion and promotes transparency in financial transactions. It spreads the tax burden over the year rather than imposing a lump sum tax liability at the end. What are the different types of payment on which TDS is applicable? TDS is applicable to various types of payments in India. Some common types of payments on which TDS is applicable include salary, interest on securities, payments to contractor, contracts and subcontracts, commission payments, sale of house and rent payment, insurance commission, dividends and royalties, interest other than interest on securities, professional fees, online gaming and winning from games like a lottery, crossword puzzle, card, etc. Can you explain the process of TDS deduction and remittance? The process of TDS deduction and remittance involves the following steps. Identification of TDS liability. The deductor, a person who is responsible for making the specified payments, identifies the transactions on which TDS is applicable. This includes determining the nature of payment, applicable TDS rates, and any thresholds or exemptions. TDS deduction. The deductor calculates the TDS amount based on the applicable rate and deducts it from the payment amount. The deduction is made at the time of making the payment to the recipient. TDS certificate. The deductor issues a TDS certificate to the recipient, providing details of the deducted TDS amount. The certificate is typically issued quarterly or annually, depending on the frequency prescribed by tax regulations. TDS payment. The deductor is required to remit the deducted TDS amount to the government within the prescribed timelines. This involves depositing the TDS amount through online or offline modes using the This involves depositing the TDS amount through online or offline modes using the appropriate tax challan. TDS return filing. The deductor is also responsible for filing periodic TDS returns with the tax authorities. These returns provide details of the TDS deductions made during a specific period, including information about deductees, TDS amounts, and other relevant details. TDS credit to deductee. The TDS amount deposited by the deductor is credited to the deductee's PAN, permanent account number, as per the TDS certificate issued. The deductee can view the TDS credits in their Form 26 as, which is an annual consolidated tax statement. TDS reconciliation. The deductee reconciles the TDS credits reflected in their Form 26 as with their own records. Any discrepancies or mismatches are addressed through appropriate procedures with the tax authorities. What is a TDS return? A TDS Tax deducted at source. Return is a statement or form that needs to be filed by the deductor with the tax authorities to report the details of TDS deductions made during a specified period. It serves as a summary of TDS transactions and helps in reconciling the TDS amounts deducted and deposited with the tax department. What are the forms for filing TDS returns? The forms for filing TDS, tax deducted at source, returns in India depend on the type of deductor, nature of payment, and the period for which the return is being filed. The commonly used forms for TDS return filing are Form 24Q. This form is used for filing TDS returns on salaries paid by non-government deductors. Form 26Q. This form is used for filing TDS returns on payments other than salaries made by non-government deductors. It includes payments such as interest, rent, commission, professional fees, etc. Form 27Q. This form is used for filing TDS returns on payments made to non-residents, foreign entities, for various types of income. Form 27EQ. This form is used for filing TDS returns on tax collected at source, TCS, by sellers of specified goods. What is the due date for depositing the TDS to the government? The due date for depositing TDS, tax deducted at source, to the government depends on the type of deductor and the mode of payment. Here are the general due dates for TDS deposit. Non-government deductors. For TDS deducted during the month of March, on or before 30th April of the same financial year. For TDS deducted in months other than March, within 7 days from the end of the month in which the deduction is made. Government deductors. For TDS deducted during the month of March, on or before 30th April of the same financial year. For TDS deducted in months other than March, within 7 days from the end of the month in which the deduction is made. For instance, TDS deducted in the month of June must be paid to the government by the 7th of July. However, the TDS deducted in the month of March can be deposited till 30th April. For TDS deducted on rent and purchase of property, the TDS payment due date is 30 days from the end of the month in which TDS is deducted. Note, it's important to note that these due dates are subject to change. And it's advisable to refer to the latest notifications and circulars issued by the tax authorities or consult a tax professional for accurate and updated information specific to your jurisdiction. Non-compliance with the TDS deposit due dates may attract penalties and interest charges. What is a TDS certificate? And types. A TDS certificate is an official document issued by the deductor to the deductee as proof of the TDS deductions made from payments. It serves as evidence of tax deducted at source and contains essential details related to the deduction. The TDS certificate provides transparency and facilitates the deductee in fulfilling their tax obligations. There are different types of TDS certificates, including Form 16. This certificate is issued by employers to employees. It provides details of the TDS deductions made from the salary income and other relevant information. It is typically issued annually. Form 16A. This certificate is issued for TDS deductions on payments other than salary, such as interest, rent, commission, professional fees, etc. It is issued by the deductor to the deductee on a quarterly basis. Form 16B. This certificate is issued for TDS deductions on the sale of immovable property. It is provided by the buyer of the property to the seller. Form 16C. This certificate is issued for TDS deductions on rent paid by individuals or HUFs, Hindu undivided families, not covered under tax audit provisions. It is issued by the tenant to the landlord. How to deposit TDS? To deposit TDS, tax deducted at source, to the government, follow these steps. Generate Challan. Use Challan to 81 to generate the TDS payment Challan. Fill in details, fill in the required details such as TAN, tax deduction and collection account number, name, address, assessment year, type of payment, etc. Select correct TDS section. Select the relevant TDS section under which the deduction falls, such as Section 192 for salary, Section 194 for interest, etc. Choose payment mode. Choose the appropriate payment mode, either online or offline. Make payment if paying online. Use net banking or other online payment methods to complete the transaction. If paying offline, visit an authorized bank branch and submit the filled challan along with the payment. Retain counterfoil. Collect the payment counterfoil or receipt provided by the bank as proof of payment. What are the important TDS return due dates? Payment due date. TDS return due dates. Quarter and quarter period, month and due dates. TDS payment due dates. Month and end of quarter and due dates to deposit TDS to the government. What are the TDS rates for different types of payments? The TDS rates for different types of payments can vary based on the nature of the payment, the applicable provisions of the Income Tax Act, and any exemptions or thresholds specified. Here are some common TDS rates for certain types of payments in India. For salary. TDS rates for salary payments are based on the individual's income tax slab rates as per the Income Tax Act. The employer deducts TDS based on the employee's estimated tax liability. For rent. TDS rate on rent payments is generally 10%. However, if the annual rent exceeds a specified threshold, currently 2,40,000 in most cases, the TDS rate increases to 10%. For commission and professional fees. TDS rate on commission and professional fees payments is typically 10%. For interest. TDS rate on interest payments to residents is typically 10%. TDS rate on interest payments to non-residents can vary depending on tax treaties or applicable sections of the Income Tax Act. For contracts and subcontracts. TDS rates for contracts and subcontracts can vary depending on the nature of the work, provisions of the Income Tax Act, and any specific notifications issued by the tax authorities. For dividends. TDS rate on dividends distributed by companies is currently 10%. For lottery or gain winnings. TDS rate on lottery or gain winnings is 30%, excluding the applicable surcharge and cess. Note: it's important to note that the above rates are general guidelines, and specific TDS rates may be subject to change based on updates in tax laws, exemptions, and notifications issued by the tax authorities. It's advisable to refer to the latest notifications or consult a tax. What is Form 16 and Form 16 are in relation to TDS? Form 16 is a TDS certificate issued by employers to employees, providing details of TDS deductions made from salary income. Form 16I is a TDS certificate issued for deductions on payments other than salary, such as interest, rent, commission, etc., issued by deductors to deductees. What are the consequences of non-compliance with TDS provisions? Non-compliance with TDS provisions in India can result in several consequences and penalties, including interest and late fees. If TDS is not deducted or deposited within the prescribed timelines, interest and late filing fees may be levied on the deductor. The interest rate is generally 1% per month or part thereof, calculated from the due date of TDS deduction payment until the actual date of compliance. Penalty for late filing. A penalty under Section 234E of the Income Tax Act may be imposed for late filing of TDS returns. As of my knowledge cutoff in September 2021, the penalty is 200 per day until the return is filed, subject to the maximum amount of TDS deducted. Disallowance of expenses. In case of non-deduction or non-payment of TDS, the Income Tax Department has the authority to disallow the expense claimed by the deductor. This can lead to an increase in the taxable income of the deductor. Prosecution proceedings. In severe cases of non-compliance, prosecution proceedings may be initiated against the deductor, which can result in fines and imprisonment. Non-availability of TDS credit. Non-compliance with TDS provisions may lead to discrepancies in the TDS credit available to the deductee. This can cause difficulties in claiming the correct amount of TDS credit while filing income tax returns. Tax recovery actions. The Income Tax Department has the power to take recovery actions, such as attaching assets or initiating recovery proceedings, to collect the outstanding TDS amount. What is the difference between TAN and PAN? TAN, Tax Deduction and Collection Account Number, is a unique 10-digit alphanumeric number issued to entities responsible for deducting or collecting tax at source. It is used for identification and reporting purposes in TDS TCS, tax collected at source, transactions. PAN, Permanent Account Number, is a unique 10-digit alphanumeric number issued to individuals, entities, or taxpayers. It serves as a universal identification number for various financial transactions and is required for filing income tax returns, opening bank accounts, and conducting significant financial transactions. What is the difference between TDS and TCS? TDS, tax deducted at source, is a system in which tax is deducted by the payer at the time of making specified payments, such as salary, interest, rent, etc., and deposited with the government on behalf of the recipient. TCS, tax collected at source, is a system in which the seller collects tax from the buyer at the time of sale of specified goods, such as scrap, minerals, liquor, etc., and deposits it with the government on behalf of the buyer. What is the bank Challan number? Bank Challan number refers to the receipt number which a bank branch, where TDS is deposited, provides. The bank branch provides a different receipt number for each challan which is deposited. This challan number has to be mentioned in the TDS TCS return. How can TDS be claimed as a refund? To claim TDS, tax deducted at source, as a refund, follow these steps. Verify TDS details. Ensure that the TDS deductions made by the deductor are correctly reflected in your Form 26-AS, which is an annual consolidated tax statement. It should show the TDS amounts deducted and deposited by the deductor. File income tax return. File your income tax return for the relevant assessment year. Include all your income from various sources, including the income on which TDS has been deducted. Calculate tax liability. Calculate your total tax liability for the assessment year after considering deductions, exemptions, and other applicable provisions. Claim TDS credit. While filing your income tax return, claim the TDS credit by providing details of the TDS deducted as per your Form 26-AS. This will be reflected in the tax computation section of the income tax return form. Refund processing. After filing your income tax return, the tax department will process your return and verify the TDS details. If the TDS deducted exceeds your tax liability, you will be eligible for a refund. Refund disbursement. Once the income tax return is processed and the refund is determined, the refund amount will be credited to the bank account mentioned in your income tax return. Alternatively, you may receive a refund through a physical check, depending on the preference selected while filing the return. How does TDS contribute to tax revenue collection by the government? TDS, tax deducted at source, plays a crucial role in tax revenue collection by the government. Here is how TDS contributes to tax revenue. Timely collection. TDS ensures the timely collection of tax by deducting it at the source of income itself. This helps prevent tax evasion and ensures a steady inflow of revenue to the government. Widens tax base. TDS expands the tax base by bringing more individuals and entities under the tax net. It covers various types of payments such as salaries, interest, rent, commission, etc., thereby capturing a significant portion of income and ensuring tax compliance. Ensures accuracy. TDS requires deductors to accurately calculate and deduct tax as per the prescribed rates. This reduces the possibility of underreporting or incorrect reporting of income, leading to improved accuracy in tax calculations and revenue collection. Distributes tax burden. TDS distributes the responsibility of tax payment between the deductor and the deductee. The deductor deducts and deposits tax on behalf of the deductee, ensuring that the tax liability is shared and paid in a timely manner. Reduces tax evasion. TDS acts as a deterrent against tax evasion as it ensures that tax is deducted at the time of payment itself. This reduces the chances of taxpayers evading tax by improving transparency and accountability in financial transactions. What are the penalties for late filing of TDS? Late filing fee. Sec 234E. A late filing fee is applicable under Section 234E of the Income Tax Act. As of my knowledge cutoff in September 2021, the late filing fee is 200 per day for each day of delay until the return is filed. However, the total fee cannot exceed the amount of TDS deducted. Penalty. Sec 271H. The assessing officer may direct a person who fails to file the statement of TDS TCS within the due date to pay a minimum penalty of 10,000 rupees, which may be extended to 1 lakh rupees. What is TDS receivable entries? TDS, tax deducted at source. Receivable entries refer to the accounting entries made to record the amount of TDS deducted by a deductor but not yet received or realized by the deductee. It represents the receivable amount of tax that the deductee is entitled to claim as a credit against their tax liability. For example, let's say company XYZ is a deductee and company ABC is the deductor. Company ABC deducts TDS of 10,000 from a payment made to company XYZ. The accounting entry for company XYZ to record the TDS receivable would be TDS Receivable AC 10,000 to company ABC 10,000. In this entry, the TDS Receivable AC is debited with the amount of 10,000 representing the TDS receivable from company ABC. The corresponding credit is made to company ABC, reflecting the liability of the deductor. The TDS receivable entries reflect the amount of TDS that is due to the deductee but not yet received. Once the deductee receives the TDS amount from the deductor, the TDS receivable account is credited and the corresponding bank or cash account is debited to complete the accounting entry. What is TDS payable entries? TDS, tax deducted at source. Payable entries refer to the accounting entries made to record the liability of deducting and remitting TDS to the government. These entries are recorded in the books of the deductor when TDS is deducted from payments made to vendors, contractors, employees, or other parties. Example of TDS payable entries. Let's say a company pays a contractor 50,000 for services rendered and deducts TDS at a rate of 10%. The TDS payable entry in the company's books would be as follows. Debit contractor's expenses or relevant expense account 50,000. Credit TDS payable liability 5,000. Credit bank cash 45,000. In this example, the company debits the expense account for the full payment made to the contractor and credits the TDS payable account for the TDS amount deducted. The net amount after deducting TDS is credited to the bank or cash account, reflecting the actual amount paid to the contractor. These entries reflect the liability of the deductor to remit the TDS amount to the government within the prescribed due dates. Once the TDS is deposited, the TDS payable account will be reduced accordingly, reflecting the discharge of the liability. Explain if Pan not furnished for TDS. If Pan, permanent account number, is not furnished for TDS, tax deducted at source, transactions, there are certain implications and procedures to be followed. Higher TDS deduction. In case the deductee fails to provide their PAN to the deductor is obligated to deduct TDS at a higher rate. As per Section 206 of the Income Tax Act, if PAN is not furnished, the TDS rate shall be the higher of the following: the rate specified in the relevant section of the Act or the rate of 20%. TDS certificate without PAN. The deductor cannot issue a TDS certificate, such as Form 16 or Form 16A, to the deductee if the PAN is not furnished. However, they still need to deposit the TDS amount with the government. No credit for deductee. The deductee who fails to furnish PAN may face difficulties in claiming the TDS credit while filing their income tax return. The TDS amount deducted will not be linked to their PAN, which may lead to discrepancies in their tax records and computation. PAN verification. The deductor is required to verify the PAN provided by the deductee with the help of the Income Tax Department's online PAN verification facility. This ensures the accuracy and validity of the PAN details provided.